Let me show you my opening range breakout trading strategy that, if I would have been paying more attention, would have made me over $3,000 just on Friday alone. This opening range breakout strategy is one of the most simple strategies you can use, and time again, it's proven to be effective over and over and over again. Now, this trade doesn't present itself every single day, but when it does, it always makes money. Let me show you exactly how to do it. This opening range breakout strategy starts right here. We went back on the chart. We're in replay mode. This is from Friday, and we're looking at NQ. So New York session opens at 9:30 Eastern Standard Time, which for me, I'm on the West Coast, so that's 6:30 a.m. Pacific Standard Time. Is what we want to do is wait for the first 5-minute candle to close. We're on the 5-minute chart right here. We're waiting for 9:35, and whatever this is right here, we're going to come over to our rectangle tool, and we're going to cover the top wick all the way to the bottom wick, and this is going to create our opening range breakout zone. Now, is what we're looking for here is candles to come down below the zone, which is happening, or above the zone. And we're also looking for a fair value gap, which looks like this right here. I have highlighted with the Lux Algo fair value gap indicator. You can get this very simply by just coming up here to indicators and in the search bar typing in fair value gap. I already have it favorited. It's the most used, and you would just favorite it and then click it, and it automatically adds it to your chart. So let's watch this chart go. It's down, and we're going to come back, touch the zone, and now we're going to wait for the move. So we're coming back down, and there's fair value gaps created right here on the way down. I never go into a play until it comes back and touches the zone. It always has to retouch. I let this play out because this is the most volatile time of the day. Right after open, it could come here and just completely tank, and I just miss out, and that's okay. I just won't trade that day. I always wait for the zone to come back and retest. When it does retest, I'll be able to tell if it breaks out up or if sellers are going to remain in control from this time right here when it operated under the opening range breakout. So we have a fair value gap right here. These ones are almost omitted because they're going to be cleared right here. So we left the zone, touched the zone, and now we're breaking out below. Boom. The very next thing, big drop, fair value gap right there, and I wait to see this is reclaiming it, but it doesn't take the whole thing. I would have entered a short position right here on this next 5-minute candle because this gap still remained. Is what I would have done at this point is I would have set my stop loss right here at probably 45, and I would have ran this down to 90, targeting a 1 to 2 risk to reward. When I do plays like this, I'm willing to risk $500 with the potential of making 1,000. That's my 1 to 2. I put up $500 to make 1,000, and once I'm in, I'm letting it play out. So let's take a look at this. Right here, we would have entered right here at the start at 11:40, and by this time right here at 12:05, 25 minutes later, we would have been up $1,000. And this is on NQ. So the opportunity was there. We missed it because I wasn't looking at NQ. It was Friday and it was Halloween, and I have 3 kids, so I was a little distracted. Now, let's verify this with ES. That's another popular one that people like to trade a lot. So we're still in replay mode. I'm not going to play through the whole entire thing, but if we went back to 9:35 right here, excuse me, right here, this gap, we would have taken our rectangle. We would have went top wick to bottom wick right there. We would have been able to see we leave the zone. No fair value gap is present here. We come back into the zone just like NQ. They follow each other. We come out, back in, fair value gap. Boom. We retouch the zone, another fair value gap. We would have entered again right there at the top of this fair value gap that never reclaimed. Our stop point would have been at 10. You can see here our take profit would have been 20. So again, in that exact same time frame, whether we're watching NQ or ES, we had an entry opportunity, we missed it, and we would have clipped right here for another $1,000, risking 500 to make 1,000. The chart would have played out, and this system would have worked. Now, we've looked at NQ and we've looked at ES. Let me just show you gold because it does operate different. And this is one I would not have done. I actually don't watch gold during the New York session open, but if you do, I'll explain to you why I wouldn't have went into it and the reasons behind it. So let's go ahead and play this out. I have the 5-minute candle mark top wick to bottom wick, and let's just see what this does here. Okay, so this one honestly would have been really hard for me. I you this chopping through right here in the range, it's coming back and forth, and then right here, boom, big drop. It maybe starts to reclaim a little, and then boom, big drop, creating the fair value gap. And I would have wanted to go in right here. And if I would have, I probably would have been okay. But this is what I would have done in this scenario. So I would have went right here. I would have been like big candle, big candle. There's my fair value gap. It maybe would have picked up a little bit to there and then another drop. I would have hopefully entered right here and I would have stuck to what I wanted to do. I would have set my stop loss right about here. And then I would have set my take profit at a 1 to 2, which would be 27 down here. So sticking to my system, this is how I would have operated. But I never, when they're like back to back to back with a fair value gap and there's nothing kind of reclaiming here, I just don't feel comfortable because I know I'm going to get caught. But if greed got the best of me, I would have tried to catch it. So you can see here as it plays out that I actually would have ticked out right there, but I didn't go in right at that exact point. It would have just chopped around right here. So I could have went in and I maybe would have made money, but I just never like if this candle right here didn't happen, I would have just chopped around and like right here I would have lost. It's retaking. So you kind of get one, two, three, four massive swings, and then it starts going back. If this right here was even 75% of what it did, I wouldn't have hit my take profit and it would have just chopped and chopped. And then right here, we're already out past, like, we're into the next day at this point. I'm caught up in Friday now, and this was Thursday. So you kind of have to risk that. And maybe it would have worked out and it would have been the gambling part of it. I just wouldn't have done it. I don't, I think in my head I wouldn't have done it. Maybe I would have, who knows? But NQ and ES would have hit. Gold technically would have hit, but you didn't have any kind of reclaim of this fair value gap. So there's liquidity just sitting right here. There would have been nothing to retest this to know that sellers are staying in control. If this were to retest with some strong buys or somewhere in here would have kicked in here, it would have touched this zone and then it would have went back down and I would have known sellers are still in control and they're not letting this liquidity get absorbed. So, with all of that being said, is this strategy the best out there? No, there's probably better strategies, but it's when you're like, okay, did this candle do this and this did this and did it overtake here and did it, and you're like, okay, also then there's this. When you have 6, 7, 8 different layers that you have to manage to go in to one play that maybe presents itself one time a day, and if you miss it, you miss it. When there's all these moving layers, I just like to do the opening range breakout. I check for my 5 minute time frame, I map it out, and if it hits, it hits. And if it doesn't, then that's fine. I only take 2 to 3 trades a week. I don't make a trade every single day. My goal is not to trade every day. My goal is to see my indicators, see my strategy, and when I see one that presents itself that looks like one I've seen hundreds and hundreds, maybe even thousands of times, my research and my strategy tells me I should hit my goal. And knowing that is enough for me to have enough conviction to go into that play. And I just go with it. But it only presents itself 2 or 3 times in any given week. So, like, you'd see how if I was looking at gold and not looking at NQ or ES that day, I would have missed both plays. If I was just looking at ES, which I was, and not looking at NQ, I would have missed another opportunity there. So, if you don't have a strategy and you're looking for a very simple one to get started, and you just want to learn one thing that can make you money, focus on the opening range breakout orb strategy on the first 5 minute candle and just try it for 2 weeks consistently and see how your bankroll looks at the end. If you guys found any of this helpful, make sure you subscribe to the channel. We are trying to grow and share the information that we know or that I know, and we look forward to seeing you guys on the next one.